Thank you so much, ladies and gentlemen, and welcome again to another video where we talk about finances, businesses, investments, and so on and so on. Now, before I even continue, let me just introduce the topic of today when we are talking about holding cash or money. Now, ladies and gentlemen, holding cash is one of the strategies that most business people use or investors use to manage their businesses. It's one of the ways in which you can be able to manage cash that you have. And we normally call cash that is so much liquid, or anything that you can be able to transfer it or transform it into liquid cash very fast. We call them cash and cash equivalents. Now, there are so many ways of holding cash. And most business people and investors normally use what we call financial securities. Financial securities at hold cash. We have money markets. They normally use financial securities such as T-bills, T-bonds, but T-bonds not sio sana, but when it comes to treasury bills, they normally use treasury bills to hold cash. We have here, they can also use fixed deposits, right? Some people hold cash in dollars. So all these ways are ways of holding cash, and there is a reason why business people are going to hold cash when they have business, and they are not going to use everything. For example, if you are operating a business in a hotel or you have a supermarket, you're not going to use all the cash to buy the inventory, or you're not going to use all the cash to buy what you require in that particular hotel. There is some cash that you are going to hold, probably for reasons that we are going to discuss here. So financial securities is one of the places that business people or investors are going to hold cash. Treasury bills, fixed deposits in banks, dollars, and so on and so on. Now, the other area where people or investors or business people are going to hold cash is money market funds, whereby they are going to purchase investments from money market funds. And we have a lot of money market funds that have been regulated by central bank, not by the Capital Markets Authority. So money market funds is one of the places that you can hold cash. And remember, money market fund is very liquid, just like other places that you can hold. Because remember, T-bill, you can hold cash for 91 days T-bill. Therefore, after 91 days, you are guaranteed that your money is back. So it's kind of liquid. Fixed deposits, again, it's you don't put money in a fixed deposit for a longer period of time. You only put that money for probably 6 months and less, or 1 year. That is a short period of time. Then in dollars, anytime you want to convert it into Kenya shillings, you can always do that. Now, money market funds are the most liquid because you put your money there, and anytime you need to withdraw that amount, you can always withdraw it, of course, at your own convenience. So these are the areas that most business people are going to hold cash or are going to manage their cash, because there is no way you are going to withdraw your cash and put it under your pillow, or you put it in your house. You have to ensure that there is some level of security. Now, for those people who intend to hold cash for a long period of time, they can use tangible assets or long-term assets such as land. They can use land. For example, you can go buy land. For example, if you are intending to hold cash for 5 years or 10 years, probably simply because probably the reason why you are going to hold cash in business, it's because probably just an example, there is a projection that for example, in car business, if you are in car business, there is a projection that in 5 years time, there will be a drop or in prices of motor vehicles. So you hold cash so that you can take advantage of that particular moment. All right. There could be so many other reasons why people are going to hold cash. For example, if the inventory is very it's very expensive, or the inflation has gone too high, such that it is most likely to come down in a future period. That is the second reason people hold cash. There are other people that people could hold cash during pandemics. For example, COVID-19. COVID-19, there are some people who held their cash until the pandemic went away. Then you get back to business, because if you use that cash, you're most likely to lose it, because there is no business that is going on. So that is another reason why people are going to hold cash. The other reason people are going to hold cash is where there is a political instability. For example, if the politics of that particular country are not stable, then you realize any country that does not have stable politics, something is going to be fishy, and you realize a lot of investors are going to lose their money, because the businesses are not going to do well and there is tension all over. So what people do is they normally hold their cash again. Now, having given those three reasons, now you understand the general information that I'm trying to air here, the reasons where, or the areas where people normally, or the reasons why people normally hold cash. Now, in this particular video, we are going to discuss what are the advantages of holding cash, all right? But now, before I go to that particular area, people can hold cash for long term. For example, if you are planning to hold cash, you can put it in land. For example, you buy a piece of land and you let it appreciate over time. Secondly, you can purchase what we call treasury bonds. So these are government bonds, and they are going to be long term. They can be as long as 20 years. So you can also subscribe to treasury bonds and hold cash there, because of course there is what you want in life, or there is what you have projected. So those are some of the reasons and areas of why people hold cash. Now, ladies and gentlemen, that was just an introduction. I want us to talk about the reasons, or I want us to talk about the advantages of holding cash and the disadvantages of holding cash, because anything that has advantages is also going to have some disadvantages. All right, you might hold that cash, but remember it's being affected by inflation and so on and so, because inflation will always be there. The increase in prices of goods and services will also be there. So it depends even where you are holding cash, if it's giving you some interest and so on and so on. We also talk about the time value of money. Time value of money, whereby the value of money in terms of buying power, it decreases over time. So if you hold cash for a long period of time, it means that value of money today might not be the same value in 10 years to come. What it can buy today, it cannot buy that the same thing in 5 years to come. So let's discuss some of the advantages of holding cash according to this particular video that we have come up with. If this one interests you, ladies and gentlemen, just make sure that you give me a like on my YouTube channel and TikTok. If you are watching from there, make sure you give me a subscription and turn on the notification bells, because I normally upload videos each and every day. So this is one of the this is another reason why you should stay subscribed in this particular channel, and so on and so on. Now, here I have my notes. Now let's talk about the advantage number one. We have liquidity. All right, liquidity. Liquidity, you realize liquidity is the ability to be able to meet short-term obligations whenever they fall due. For example, if you own a business and your employees are supposed to be paid, and you didn't have any cash in your bank, you used everything, you did not budget well, you did not look at your financial statements. So when you are buying inventory, or when you are doing procurement, you used all the money, and now it's end month and your employees have not been paid, or you have not been able to pay other short-term bills, for example, electricity bills and so on and so on. So you find yourself short of cash, and that's why holding cash is going to be one of the that is why the liquidity comes in as the first advantage of holding cash, to be able to settle short-term obligations such as rent, salaries and wages, electricity bills, and other miscellaneous bills. All right, so liquidity is the first. Now, when we talk about liquidity, we also talk about the stability of the organization. For example, if anything could happen in that organization, you can actually be ready to hold some cash there. For example, when it comes to transport sector, if you are experiencing problems with the government, you can be able to use some cash to secure your operations. All right. Now, the second one is for investment purposes. For investment purposes. Now, you realize that most investors or business people are going to hold cash, and they are going to put that particular cash in investment accounts. Just we have talked about previously, in money market funds account, in treasury bills account. Some of them are going to even buy shares from different companies. They are going to buy treasury bonds. They are going to subscribe to long-term bonds. So they are going to hold cash for a longer period of time. So they are holding cash just to earn a passive income or to have extra source of income, which we normally call as diversification, or to increase in income. So not only the primary business of the organization, but also to have alternative sources of income, just for the purpose of diversification and risk management. Now, the other thing that we are talking about, ladies and gentlemen, as one of the reasons of holding cash is, or the advantages of holding cash, is what we call emergency, for emergency purposes. All right, for emergency purposes. Now, you realize that when you operate a business, you are going to have a lot of emergencies, and you need some cash that you have put somewhere just to make sure that you have taken care of those particular emergencies. Now, for example, if you are doing a transport business, and your primary business is for transportation, for example, you move your inventory, or you are a supplier that you normally supply goods and services to retailers. Now, if your work is to do that, and whatever you use for transport, for example, vehicles, there is a breakdown in your lorry, for example, and it was supposed to move your goods and services, that one is an emergency, or it is a cost that you did not anticipate that is going to come up. So if you didn't have cash in your pocket, it means that there is not going to be any delivery in anywhere. So you need to make sure that you have put some cash in your pockets, just to make sure that you have taken care of these emergencies, because they can arise, and some costs just are not anticipated. They just emerge like that. For example, loss of power. When you lose power, or there is no power in your company, you have to use a generator. In a generator, you are going to use an extra cost of fuel. You have to buy fuel to power that particular generator, and that one is an extra cost that you had not anticipated. So running a business, as people view it, is not like so much easy, but there are some costs, hidden costs, like what I'm talking about here, that are going to be associated with running a business. And those hidden costs, in most cases, are going to be emergency costs, and they are just going to arise, and you did not plan for them. So you have to always be ready for those particular costs. All right. So emergency is one of the advantages of holding cash in an organization. All right. Now let's talk about fixed costs. All right. As now our number 4, fixed costs. Now, fixed costs in an organization, this one is a must. There are some costs that you must have to pay. For example, fixed costs like rent, right? Like rent, salaries and wages, procurement, your suppliers. Those are fixed costs. Those are money that you normally pay each and every month. Now, for example, if you're operating a car dealership business, and clients will come, they want to see the car, they want to feel it, they want to drive, they want to go for it for a road test or drive tests. And you have to make sure that that car is fueled, because you're not going to tell the client that if you want to drive this particular car, you need to fuel that car. That car is still yours until the client buys, and that's where the ownership transfer from the buyer, from the seller to the buyer. So as long as the client has not bought that particular car, the ownership remains with you. So if the client is going to want to take a drive test, then you have to fuel that particular car. And client may take drive tests, then they are not going to buy. So that one is a fixed costs that you always have to take care of. And fixed costs sometimes, for example, the example I've just given is whereby you are going to sort those fixed costs using cash. So if you didn't have cash for that particular purpose, then it becomes a dilemma. You give a client a vehicle that does not have fuel, and then inazimikia katikati ya barabara, and then you wonder, the client is like, what kind of nini is this? So again, you might even end up losing that particular client because people are of different character. So you have to be very careful about that. So ladies and gentlemen, those are some of the advantages of holding cash. Now, before I even continue with what I want to say next, let me tell you, if you are operating a business, you always need to have some cash that you have held somewhere. If you are holding cash for a short period of time, you can put it in small investments, short-term investments such as money market funds, treasury bills, bank fixed deposits, and so on and so on. Now, if you are holding cash for a longer period of time, you can purchase government bonds. You can put that money in fixed assets, long-term assets such as land, all right? But just make sure that you put money in a place that is going to earn some competitive interest for you, all right? Now, having talked about the advantages, remember, anything that has advantages has some disadvantages, all right? So we are going to look at some of the disadvantages of holding cash in an organization. And we are not going to have as many advantages or as many disadvantages as advantages, because it all depends with how you hold your cash. If you mismanage cash, then it becomes one of the areas that you are going to mess up, because cash is a current asset. Now, let's talk about the cons of holding cash. Now, the cons of holding cash. And number one, we are talking about taxes. Now, you know, ladies and gentlemen, if you put, now, before we talk about taxes, yeah, let's talk about taxes. Yeah, we can start with taxes. Now, if you put money in an investment account, it means that the profits you get there are going to be taxed. So taxation has never been an advantage to anyone. So there is some money utanyolewa na government, right? But as long as it's taxed on the profits, then hautaumia sana. But of course, you will feel, I put money to work for me, and then now the government is taking again some amount of money. So taxes are going to be there. And that's why it becomes one of the disadvantage of holding that particular cash. Now, let's talk about loss of value. Sorry, loss of value. Now, money is going to lose value over time. For example, money is going to be affected by inflation. Sorry. Money is going to be affected by inflation. So when money is affected by inflation, it means that the prices of goods and services have gone up. So when the prices of goods and services goes up, it means money has lost value. For example, if you put cash in an investment account for a long period of time, and that investment account is giving you less than the inflation rate. For example, you put money in an investment account that is going to give you 3% returns, and the inflation rate is 4%. It means that money is losing value by 1% per annum. So you need to be very careful about this particular 1%. So it's not all about putting cash somewhere or holding cash. It's all about where you hold that particular cash. Make sure that you hold cash somewhere that is going to give you a competitive return, and it's not going to be affected by taxation, and it's not going to be affected by the inflation. What do I mean by inflation? For example, if right now a piece of bread is 65 shillings, and assuming that 1,000 can buy 10 pieces of bread, right now, it means in the next 2 years, 1,000 cannot buy 10 pieces of bread. Probably it can buy 8 pieces of bread. So it means that the 1,000 has worn out or wear and tear of money because of inflation, the increase in the prices of goods and commodities. So again, that is another disadvantage of holding cash. They are going to lose value over time but it all depends where we hold cash. Now, the third thing we talk about is mismanagement. Mismanagement of cash. Now, you realize cash is the most liquid current asset that we have even in country, in the world. Cash, liquid cash, is the most liquid current asset that we have that can easily be mismanaged. And then we also have other things that we hold in a company that can easily be converted into cash. For example, interest on loans is one of the liquid assets that can be easily be converted into cash. For example, if you have given someone a loan, it's anytime they can pay, or if you demand that money to be paid, it's going to be paid immediately. So also that one is a cash and cash equivalent. So ladies and gentlemen, wherever you are in an organization and you are in business, make sure that you very much concentrate on current assets, because if they are managed, it means that you are going to sink that organization to the ground and you are going to close and liquidate everything. So make sure and be very careful about cash, how you hold it, how you manage it, who you trust with that particular cash. It's very important. Now, ladies and gentlemen, having talked about the advantages of holding cash, where you hold cash, why cash is held in an organization, and some of the advantages and how you can the solutions to these particular advantages, I would like to stop my video there. I hope you have grabbed something that can help you if you are a business person, or you're a person willing or planning to start particular business. These are the kind of things that you should consider having in your fingertips. Now, before I finish this video, ladies and gentlemen, if you're seeing me for the first time, my name is Sir John Mweri. I'm a professional accountant with X-Finop Accountancy and Insurance Consultancy. And you're wondering what I normally do. Well, this is what I do. I normally come here with whiteboard and a pen and some notes that I've written somewhere, so that I can be able to educate some of you guys, share some experiences, share some financial education and financial literacy, so that we can help each other navigate through this financial journey. And remember, our ultimate goal is financial freedom. Now, if you have not followed me or subscribed to my YouTube channel, do it right now before you even skip to another video. And then you make sure that you turn on the notification bell, so that anytime I upload a video, you are notified. All right. Also, if you feel that you want to say something about this particular video, you can put it on the comment section and give me a like on the same. So thank you so much, ladies and gentlemen, for watching this. I hope you have grabbed anything. Make sure you share this video if you feel that is interesting, so that someone can also be able to help from this particular information. Thank you so much. That was my time. See you on the next.